the stock in focus all of this morning, and that is Nazara Technologies on the back of the bill that will be presented today on online gaming. Nitish Mittersain, who is Joint Managing Director and Chief Executive Officer of the company, joining us right now. Nitish, good morning and thanks so much for taking the time. We read the clarification that you sent to the exchanges, and the point is well made. The fact that there is exposure to the extent of associate companies, and so the implications are for the bottom line. But I think a lot of your investors are focusing on the fact that you did deploy as much as 831 crore rupees to purchase this in September of last year. And if the core of this business is getting challenged, then what happens to that investment?
Sure. I think I'd like to start with reiterating what we clarified, that Nazara's revenues and EBITDA do not constitute of any real money gaming businesses, and therefore there is going to be no impact on our operating financials or going forward growth, etc., as far as our current core gaming businesses are concerned. We, of course, have invested in Moonshine, which operates Pokerbaazi, which is the leading platform in that particular space. And we believe, it has been a good opportunity for us at the time of investing. This current proposed bill, as per what's come in the media, because we don't have access to the real bill, can put some, challenges to the current operating model of Pokerbaazi in India, if it were to play out. But the team is very strong, the technology is very strong, and we will figure out how to adapt that business going forward.
Right, Nitish, good morning. Hiral on this side. So you're saying it could put pressure from here on, but let's understand how much has the contribution been with regards to the first quarter. A revenue of 192 crores, which is not a part of the consolidated books. Though you've mentioned that an EBITDA loss of around 74 crores is what you've seen, and this is on the back of higher marketing spends during the IPL. Now, the EBITDA loss was due to the front-loaded marketing costs. With that, how much has been the contribution to the losses in the consolidated book?
Sure. So in Q1, Nazara would have not included any revenues from Pokerbaazi. It would have also not included any EBITDA profit or loss from Pokerbaazi. However, the share of associates' profit and loss would come below EBITDA and translate into PAT. In this case, I believe it was around negative 20 crores or 25 crores, in that range, for Pokerbaazi's contribution in our Q1 PAT numbers.
And now to add to that, if we are saying the 800 or 855 odd crores for what you've actually bought a Pokerbaazi for, how do you look at treating this entire investment from here on? Will there be a change in strategy? Because the government has come out and said that, yes, this is not going to be allowed anymore. So what would that strategy be from here on?
So first of all, I'd like to see the actual bill being presented and the contents of it, to be able to, figure out what is the impact and how we are going to mitigate it. That said, it's also important to understand that Nazara's own strategy is focused on its core gaming business, which is a global business with over 80% of our revenues coming from international markets. We are a very diversified gaming platform, which is resilient to any such disruptions, whether it is due to regulation changes, taxation changes, changing consumer preferences, technology changes. There's always a lot going on in the gaming world. And over the last 2 decades, we built our business in a manner to be diversified and resilient to such challenges. So we believe our own strategy doesn't change. But of course, for Pokerbaazi, depending on what's in the bill, they will have to adapt to it.
Nitish, morning. I have a two-part question and just trying to understand this better. Firstly, I wish you luck that if indeed this bill comes through in the shape or form that is being believed right now, I wish you luck with re-strategizing that tech team that you spoke so highly about onto more profitable ventures. Now, until that happens, let's assume, Nitish, that we are right now talking at a time when you know for sure that this is the eventual truth. Do you do any, and it may not impact your revenues and EBITDA numbers, as you said, but does it have a one-off impact spread over 1, 2, 3 quarters on the bottom line?
There's definitely, depending again on the outcome of all of this, right? What the bill carries and how we are able to...
But I'm saying the hypothesis, Nitish, that let's assume that this is how it turns out. Yeah.
Yes, there would be. And Nazara has generally been a very conservative company. We report our financials conservatively. So if the situation demands it, we will create necessary provisions.
Is there any sense of how large could these provisionings that you would have to take, Nitish?
It's very difficult to anticipate, but the best way to think of it is, think of the entire investment as a provision.
Okay.
If the bill is very stark in terms of what online real money gaming can do in India.
Got it. The other question, Nitish, that I have for you is that because you spoke so highly of this team, right, and you would have paid a top dollar for it because of the nature of the team, what is it that you can pivot to doing? Part one. Part two, could you kind of sell it on an international jurisdiction for business to be done there?
Yeah, absolutely. The team has maybe 200 engineers, so it's extremely tech first business, tech first platform, which is relevant globally and not in India. Because India was a home market, the team has focused a lot on building the business over here. But this technology platform that they have is one replicable across different geographies. Second, like you suggested, there could be licensing of this platform to other partners. There could be a potential sale, but it's all speculation. To be honest, it's very early at this point of time for us to be able to have a clear way forward unless we know what is the impact and what is the content of the bill.
Based on what you've said, and we've been speaking about the implications for your investment so far, but there are a lot of unlisted companies as well, and you're aware of the landscape in the real money gaming space. The point of contention seems to have been that there is no distinction that is made between skill-based and chance-based, and it's all bucketed under one. And so therefore, the stance that the government seems to be taking, and here I know that we're talking about this in hypotheticals, but what happens to the landscape here? Because ultimately there are a lot of people that are currently employed in the industry. There's a lot of investment that has taken place, money that is spent on advertisements, and so therefore, what happens to the industry in your opinion?
Well, of course, it's going to be an extremely challenging time for the industry. I would say a watershed moment for the industry if something that is speculated at this point of time were to come true. That said, I'm assuming that the government would have, looked at all aspects before taking any decision. So let us see what really happens.
Nitish, the other aspect is, what the government has come out and said is that now there is no distinguishing factor with regards to game of chance versus real money, right? There's absolutely no distinction now. So any of the other aspects or any of the other subsidiaries of Nazara that fall under this category now?
Absolutely not. So it's the only exposure we have with context to real money gaming, where money in and money out exists. Of course, what we operate is through Pokerbaazi is a skill-based platform, but like you said, there is no distinction being made. Nazara, of course, has a large number of global gaming IPs, which are growing businesses for us. And I think in any case, in the last year, a lot of our focus has been to double down on it. We've acquired some very good companies like Fusebox Games and Govt Games in the last 12 months. And we will continue down that trajectory as far as our own strategy is concerned.
I remember a conversation that we've had after one of your quarter results. I don't remember exactly when, but I do remember that you had said that as a company, you are being a little bit cautious when it comes to real money gaming because you were uncertain about the regulations, about the landscape. And yet this acquisition came through in September of last year. Wisdom of retrospect being 2020, etc. But what changed and why did you make that large investment in the context of the business?
Yeah, our thinking really for many years we were conservative on this particular model, but our thinking of the acquisition at that point of time was one, the October 23 GST regulation had come out clearly with what taxation should be paid by real money gaming companies going forward, and that kind of made us feel that while the government will tax appropriately these businesses, but the legitimacy and the sustainability of these businesses will be high. Second is, of course, because of these GST changes, the profitability of these businesses were impacted in short term, which meant that we could acquire a large market leader such as Pokerbaazi for a relatively lower valuation compared to what was happening in the market prior to this. So I think there were multiple combinations that we took this, a decision on. And I don't think we have any regret. I think the beauty of the Nazara platform is that it's built on a very strong foundation, on a very strong balance sheet. And once in a while, we have to take, opportunities that can really take the business and the company to the next level. But we always ensure that the core stability of the business remains, the core profitability of the business remains, the core diversification of the business remains, which means we are able to take any disruption like this may be without it really impacting too much, and we can continue doing our business and going forward. That's what's allowed this company to exist for 25 years in an ever changing market, and we hope it will continue to do fantastic work for the next 25 years.
Last very quick clarification, and here again I understand we're talking about in hypotheticals, but just to follow up to Neeraj's question, he had asked you whether you would likely spread this over a few quarters if you have to take a provision, or whether it'll be front loaded. Which is it going to be, the former or the latter?
I think it's not a binary answer. We will really need to evaluate what is the impact, or what period is the impact, what is the mitigation opportunities we have in our hand. But I can assure you that whatever decision we will take will be a conservative decision.
Nitish, thanks so much for taking the time, and I wish you all the best.
Thank you.